So you've been thinking about selling your Atlanta home for a while now, and maybe you've even gotten the house ready. Decluttered, you've painted, and a few conversations with agents, and then you looked at mortgage rates and you saw 6 point something. And you thought, you know what? I'm just going to wait. Rates are going to come down, and when they do, buyers will, my home will sell for more and everything will work out. Friend, I hear this every single week, and I need to tell you something that no one else is saying out loud. That strategy could really be costing you thousands, possibly tens of thousands. And by the time rates move, the window you're waiting for may already have closed. Hey, I'm Christa Coore-Powell, Atlanta realtor with EXP Realty. And on this channel, Atlanta Real Estate Insider, Atlanta homeowners, the real numbers, the real strategy, and the things your listing is not going to tell you. And if you're thinking about selling in the next 1 or 2 years, this video is for you. Now, before I go an inch further, listen, I built the Atlanta home seller checklist and has the exact net proceeds worksheet I'm about to walk you through in this video, plus a full pre-listing prep guide. It's free, it's linked below, and it's pinned in the comments. Grab it right now while you're thinking about it. It covers everything we're going to talk about and then some. Go grab it, then come right back to me. Let's get into it. So let's start with rate reality, because I want you to have actual data, hopes, not what your brother-in-law said at Thanksgiving. As of the mid-2026, 30-year fixed-rate mortgage rate is sitting in the low to mid 6% range. It's actually eased a little recently, but it has hovered in the sixes for most of the past 2 years. The Federal Reserve has made it very clear that they are not in a rush to slash rates back to the 3% world we lived in during 2020 and 2021. That world was a once-in-a-generation anomaly. It happened because of a global pandemic and was a deliberate policy decision to flood the economy with cheap money. Let me say it for the folks in the back. This is not coming back. Now, rates will move. They'll tick down. Hey, you might see a 5.9% headline someday. The outlook right now is higher for longer. The people who study this for a living expect rates to stay in the sixes, not collapse. And here's what that means for you as a seller. If you're waiting for a rate to drop significant enough to dramatically change buyer behavior, you're waiting for something that may not come. And while you're waiting, your life is going to keep on keeping on. It's going to be continuing. So let's talk about it. Here's the question I ask every seller who tells me they're waiting on rates. What is happening in your life right now? Because here's the truth. Rates are a buyer problem. They affect what a buyer can afford in monthly payment terms. But you, as a seller, don't have a rate. You have equity. You have a life circumstance. You have a timeline. And those three things matter more than what the Federal Reserve decides to do with the overnight lending rate. I'm going to give you 3 situations where waiting on rates is actually costing you money. Situation 1. You're in a home that no longer fits your life. Maybe your kids are grown and gone and you're rattling around in a 4-bedroom house. Every month you stay there, you're paying property taxes, maintenance, and insurance on space you're not using. That could be $2,000 to $4,000 a month in carrying costs, depending on your home value. You wait 18 months. That's $36,000 to $72,000 in costs for a home. You're living out of inertia, not out of love. That is the rate mistake no one's talking. Situation number 2. You need to relocate and you're delayed. I work with a lot of sellers who have a job change, a family situation, or just a desire to be somewhere else, but they're holding on because rates aren't right. Listen, if your destination is a lower cost of living market, or you're moving to a cash purchase situation, or if you're downsizing into something significantly less expensive, a rate drop that saves buyers a few $100s a month in payment is not going to change your net proceeds by more than a few $1,000s most. But every month you delay the life you actually want to be living. That has a cost that doesn't really show up on any spreadsheet. Situation number 3. Equity position is near its peak. Atlanta home values have been, they've been real strong. And we've seen appreciation that has outpaced almost every other major metro in the country over the last 4 years. But here's what appreciation curves will always do. And sometimes they correct. If rates do drop significantly, say to 5.5%, one of 2 things happens. Either demand surges and prices stay high, or we're in that environment because the economy has softened, which tends to pull prices down. You don't always get cheap rates and high prices at the same time. And sellers who are sitting on significant equity right now need to ask, am I protecting this equity or am I gambling that it grows further? So let's talk about running some actual numbers. I don't want to just tell you that this feels wrong. I want to show you what it looks like in dollars. So I'm going to use a real scenario from this Atlanta market. A home in the zone that I work in, let's call it a 3-bedroom in Decatur. It's currently valued at $450,000. So in scenario A, so at $450,000 with that typical seller's mortgage payoff of, say, 220-something thousand remaining, you're walking away with roughly $230,000 in gross equity before closing costs. Closing costs on the seller side in Georgia typically run 7 to 9% when you factor in agent compensations, transfer taxes, and closing fees. So let's call it 8%. So that's what? $36,000. So your net proceeds are approximately $124,000. You bank that equity today, move forward with your life. Scenario B, you wait 18 months for a rate drop. Best case scenario would be that rates drop to, say, 5.8%, and buyer demand pushes your home value up 4% to $468,000. So proceeds improved by roughly $14,400. That sounds good, right? But you paid 18 months of carrying costs. If your mortgage, taxes, insurance, and maintenance on that home total $3,200 a month, and in this price range indicator, that's probably a conservative, that's $57,600 in costs you paid to stay put. You subtract that $14,400 appreciation gain, and you've net negatived yourself by $43,200 to wait for a rate environment that may or may not materialize. And that's the best case. That scenario requires rates to actually drop meaningfully and buyer demand to respond, and your home to appreciate in that window, and no life disruption during those 18 months. That's a lot of ands. That math does not lie. Okay, now, I don't want you walking away from this thinking rates don't matter at all, because that is not what I'm saying. Rates matter to buyers in the payment calculation. But here's what also matters to buyers in 2026. And you need to know this as a seller: inventory. Inventory, inventory, inventory. Atlanta's active inventory is still below pre-pandemic levels in many Atlanta neighborhoods. Those neighborhoods are not buyers' markets. Buyers are competing. So if your home is priced right and shows well, you will have offers. Motivation. The buyers who are active right now, they're not waiting either. They're people who need to move. So we're talking job transfers, new babies, relationship changes, upsizers, downsizers. Rate-sensitive recreational buyers have mostly stepped back. Motivated buyers are still transacting, and motivated buyers are the buyers you want because they don't fall out of contract over financing hiccups. Condition and pricing. Those are the areas where sellers have the most control. A $450,000 home that shows like a $380,000 home is sitting regardless of what rates do. Meanwhile, a $450,000 home that shows like a $490,000 home is getting offers in the first weekend. Rates are not going to change that equation. So what do you do with all of this? Here's the framework I walk my sellers through. 3 questions, and now I want you to answer these honestly. Question number 1, does my current home serve my life right now? Not 2 years ago, not theoretically, right. If the answer is not really, that's very important information. You're paying to stay in a situation that isn't working, and that has a cost. What actual net proceeds, and where do I go from here? This is the number that matters. Not what Zillow says your home is worth, your net proceeds after payoff, closing costs, and any repairs. And then, does that math work for what's next? The net proceeds worksheet in that home seller checklist walks you through this exact calculation. The same one I grabbed for you at the top of the video. If you didn't grab it yet, it's still down there in the description and pinned in the comments. Question 3. What is the real downside risk of moving forward now versus waiting? This is the one nobody's asking, right? Because waiting feels safe, but waiting has costs. Financial costs in carrying a home, and life costs in staying in a situation that is past its expiration date. If you can answer those three questions honestly, you know what to do. It does not have anything to do with what the Federal Reserve decides at their next need. Atlanta homeowners, you've got more leverage than you think right now. Inventory is still kind of tight. Buyers are motivated, and your equity position in this market has been built over 4 years of strong appreciation. The worst thing you can do is hand that leverage back to time and uncertainty while you wait for a rate that may never come. If you want actual numbers for your home equity position, your realistic net proceeds, the timeline options, grab the Atlanta Home Seller Checklist linked below. It includes a net proceeds worksheet plus a full pre-listing prep guide. So when you do move, you're moving smart. And you can always book a free seller strategy call through that same link. We'll run your specific numbers, no pressure, no obligation, just that. I'm Christa Coore-Powell. Do not stress. And always, make sure you know what the listing is not telling you.